Hello YouTube. Wishing a fantastic new year to all the traders and investors worldwide. Welcome to our brand new channel Persistent Trading Solutions, dedicated to exploring the market structure across various financial instruments globally. Join us in exploring these topics and gain valuable insights from our channel to enhance your trading performance. Let's get into the topic. What is market structure? In simple terms, it boils down to finding the direction of the market. Whether you are a seasoned trader or just stepping into the thrilling world of stock market, it is essential to recognize that understanding the market structure is a crucial foundation for achieving success in trading. No matter whatever the strategy you use, whether it is a smart money concepts, supply and demand, or swing trading, get the market direction right, and that is important for us as a trader. In this video, we will take you through basic to advanced concepts that every trader can apply in their trading journey. I can confidently tell you that today's video and upcoming videos in our channel will improve three things in your trading career. One is clarity on your trade plan, next, confidence in the trade execution, and finally, drastic improvement in the risk reward. Welcome back, traders. Let's just go through the basics first and then move on to advanced topics using multi-time frame analysis. Basic stuff here, but trust me, we need to have a solid foundation here before going into the advanced topic and the examples. Market is in clear uptrend, forming higher highs, higher lows, higher highs, higher lows. Market is clear downtrend, forming lower lows, lower highs, lower lows, lower highs, and trending downward. If you see the uptrend, our main focus will be whether the market is forming higher lows or is it changing the trend. Every time higher low is confirmed when the candle is closed above the previous swing high, and that we call it break of structure. Here we see the break of structure, we call this break of structure when the candle is closed above the previous swing high, and that confirms your higher low here. Similarly, in downtrend, market closing below the previous swing low confirms high, and this is the low. The break of structure happens and the market pull back and then forming a lower high. How do we confirm this lower high? When the market closes below the swing low causing the break of structure, then we can confirm this lower high. Similarly, the trend continues. So it is very simple to understand. Market is in a clear uptrend, forming higher highs, higher lows, higher highs, higher lows. And the market is in downtrend, forming lower lows, lower highs, lower lows, lower highs, lower lows, lower high. So this is the ideal market structure. But in reality, market exactly doesn't behave. Otherwise, it becomes so easy. So there are like complex structures and the internal structures that it forms. Let's see what it is. So market moving from low to high, pulled back, and then forming a higher low here. When do we confirm this a higher low? Only when a candle is closed above the previous swing high. Now the market is again pulled back. Instead of moving high, what happened? Market made a swing high, internal swing high, and again it has fallen down. That means this internal change of character happened, but it did not close below the previous swing low. We don't know at this point of time whether this is your higher low, because we will confirm this higher low only when it is closed above swing high. So the market again pull back. So we know that market is trying to go up. We still do not know whether this is the higher low because it still did not close above the previous swing high. So here we still did not know because it is still now, but if you observe here, the market is in counter trend compared to the previous trend, but it is still within the major swing that we are looking at. Now here it is pro trend, it is along with the previous trend and it is closing above the previous swing high. Then we can confirm the lowest point within this zone, this is called the higher low. So this is like your strongest demand now. Similarly, on the downside, we can confirm this is the strong high when only when a candle is closed below the previous swing low. Then we can confirm this is the high. After that, we know that this is the swing low that it has formed, but market did not close for pretty some time, so forming the internal structure, and we can confirm this break of structure only when a candle is closed below the previous swing low, and at that point of time we can confirm that this is the lower high. So this is how we can define the market is forming whether higher lows or lower highs. Okay, let's look at trend change. So here we just use a term called change of character. So this indicates basically a change in the direction. So from uptrend to downtrend, similarly from downtrend to uptrend, the point where that happens, that trend change happens, it's called the change of character. So let's look at here. Till now we learned the break of structure, which is nothing but breaking the previous swing high and closing above that. And then the break of structure continued in the uptrend, closing above that. Break of structure still continued on the upside. Break of structure still continued. So it is still in the uptrend. It has not closed anywhere below the previous swing low. So now the break of structure still continued. At this point of time, instead of continuation, the market has actually changed its character. It's actually shifted downside. So this we call it as change of character instead of break of structure. So once the market direction has changed, so that means so far it is uptrend, now it has started downtrend. From here onwards, it is no more change of character. That becomes the break of structure on the downside. Now the break of structure on the downside continue happen because it is not closing above the previous highs and it is still continuing the downside. At this point of time, given market is not breaking further down, instead of that it is closed above. Now it is no more a break of structure. Now this becomes the change of character because market shifted from the downtrend to upside. So this is called the change of character. From here onwards, you will see that this becomes the break of structure. The break of structure will continue until we see that the previous swing low is taken. So this is like an uptrend. This is like an uptrend continued here. From here, the market has changed its character and downtrend continued. Here, the market changed its character and uptrend continued. So this is the concept of change of character. Very simple. Only thing is we need to know that where is that particular shift has happened. That's called change of character. It is just a naming convention. Otherwise, a change in the direction, people easy to understand. So that's called change of character. Now let's look at the examples. Okay, let's start with our example on Bitcoin. This is a weekly time frame in trading view chart, and we have up to 2017. Let's see on the weekly chart whether we are able to map the market structure correctly and get the direction. So if you see here, initially the break of structure happened, right? Break of structure to bullish side happened. So this is our weekly break of structure. Once the break of structure on the bullish side happens, we can know that, okay, this is our strong low. So this is our strong demand zone on the weekly time frame, right? So once the break of structure happens, what do we expect? We need a pullback to occur to take a trade, and then we eventually target this high. We eventually target this high because when the market is in bullish mode, when the pullback ended and it is following the the original trend, what we have, the bullish structure, because there is a break of structure on the bullish side. What we expect, the pullback to come and then take out this high. That is our expectation, right? Continuing with the same trend. And this is the basic structure that we have initially discussed. And the complexity, how do we know that the pullback has started? We'll know the pullback has started once there is an internal change of character to the downside happens, and then the bearish side it continues. How do we confirm pullback is ended? We need to have an internal change of character to the bullish side to confirm. So this is where the bullish side on the internal side is confirmed, and this is where the bearish side, the internal change of character confirmed. So that's what we have discussed in our trend change. Like, this is the major structure, the orange line, and the blue is the internal structure. So this is like bullish. From bullish to bearish, there is a CHoCH, internal change of character, that has happened. And now we know that the pullback has started. So it is actually formed a bearish trend on the internal time frame. But eventually the major swing structure is bullish. So how do we confirm the pullback is ended? There is an internal change of character that happened here, and now we can see that this is how the market moved higher. So similarly here the market went high, fine, and then there is a pullback, like one candle closed below the previous candle. However, it is not able to take out the previous high, but it has taken down the previous low. That means there is one internal change of character that we have seen, right? So this is confirmation of the pullback. And unless until this strong demand zone is taken out, we are still in bullish mode, but we are in internal pullback mode. Okay, the swing structure is bullish mode. Now we need this high to be taken out, and before this swing low is taken out, what happened? The market taken out the previous swing high. So that means forming a bullish structure on weekly time frame. When the bullish structure happens, what do we expect? When the bullish structure happens, we need a pullback, right? So that's what we are looking at. The market to form internal change of character, it has to first pull back and then form a lower low in the internal side, but that did not happen. Instead, market, what happened? It went further higher. See. So the market is continuing high. Again, there is a pullback, a candle closed below, but there is no internal change of character, not yet happened. So it is still continuing high. Now the market pull back and then try to go up, and then there is a change of character. Now you see the swing low is taken out. So there is a change of character. Now we know this is our swing high that we need to target after the pullback is ended, right? So this is our swing high. This is what we are targeting right now to be taken out. So this is, as of now, our weekly time frame. This is our target. So after the pullback is ended, so the market actually taken out this high. So how do we confirm the pullback is ended? Now see, the pullback has started, like the internal change of character. Similarly, there is an internal change of character to the higher side. So this is like change of character to the bullish side, which is aligned with the major swing structure. So that means probably this is our low, and then at this point of time we'll take a trade. And then how do we take the trade execution and all, we'll go in detail in the upcoming videos. So let's now stick to the market structure mapping so that it becomes easy to understand. So we'll take a trade somewhere here, and our target is here. This is taken out, right? This is like the break of structure happened. So once the break of structure happens, okay, once the break of structure happens, your previous swing, so once the break of structure from here to here, once the break of structure happens, so your previous demand zone here will now shift to this high, because within this swing, this is the strongest demand that has pushed the market higher than this previous supply, right? So this is our demand zone. So in this, our weekly strong here, now because the candle is closed above the previous swing high, the swing structure high, so now our major swing low will become this. So this will be our weekly strong demand zone. And now we need to find out where is the swing high that we need to target. For that, we need market first pull back, and there is an internal change of character happens because there is a break of structure. Like if you see here, again it's the same thing, like the break of structure. Now we need a pullback. That pullback to happen, there should be some internal change of character to happen. That is like forming a bearish trend on the internal, and then on the major swing structure, it is just a pullback, but on the internal side, it is a bearish trend, right? So let's see whether the bearish trend has formed. So the market, this is like a pullback kind of thing. We confirm the internal change of character only once the candle is closed below this. Okay, now the pullback is confirmed. Okay, now it is forming down. Now once the pullback is confirmed, okay, this is like a change of character. So what do I need? I need a change of character to happen on the higher side to take a trade, right? To take a trade and targeting this swing high. But it did not happen. Eventually, the market closed below the previous swing low. The strong demand zone is taken out. So this is like breakdown of the strong demand zone. And then the market continued low. That means now this demand zone earlier is now taken out. That means the supply has come. Where is the supply has come? It has come from here. So this will be our strong supply zone. This is our weekly strong supply zone, right? Now, what do we need? When the market turned bearish, right? When the market turned bearish, we need a pullback to take out this swing low, right? This is what our target is as of now. At this point of time, this is what our target. Now we need to know the pullback comes. How do we know the pullback comes? There should be an internal change of character to upside. So the market is forming a bullish trend. Then once the market change its internal character to bearish, then this is aligned with the larger time frame here. Then we can take a short trade and targeting this swing low. But let's see. Now here what happened is market, this is if we have taken this swing low, do we have a candle closed above this to start a pullback? No, all these candles are internal candles. So that is why there is no pullback we consider. But instead what market did was market actually closed below the candle low. That means this is all our internal candles. Like, so right now our current low is this. So we need at least this candle to be taken out to say that, okay, we are expecting pullback to start, right? We're expecting pullback. So that's what it happened. Now, how do we confirm the pullback is actually started? We need an internal change of character to turn bullish. So now here is the internal change of character happened, right? The market actually turning bullish, and then it couldn't take out this previous low, but instead it taken out the previous swing high. So there is an internal change of character. So that means the internal pullback has started. So that is exactly what we want, right? That's exactly what we want. So now we can map our structure like this. This is our previous swing high. This is our previous swing low. And from here, the market trying to, the pullback, it's going higher and higher. Okay. Now, if we want to take a short trade, what do we need? We need to come to our strong supply zone. This is our strong supply zone. The last candle, okay, from here the supply has started. It is not necessary that market can come up to supply zone and then only it will fall. There is a chance that market can turn its direction here, because in Fibonacci series, if we just mark it here, so this is our 50% zone of this particular swing. This is our premium zone, for these shorts, and this will be our discount zone, right? It can come up to the discount zone and it can reverse, right? It can reverse. Now you also see that here there is one swing high. So that is why, currently it is causing a small resistance reacting to this particular thing. So, but we should not take a sell trade immediately. It is okay. I mean, if you take the sell trade, Okay, because it is coming to the previous swing high. If it works out, fine. But if it doesn't work out, you should consider yourself as an aggressive trader, because there is no internal change of character that you have seen to take a sell trade, right? So right now, this is just a reference point for us to have a look. Why is this stopping at this point? Now, right now, it is, the breakout structure happened on the higher side. Now, what do we need? If we consider internal swings, our major swing structure is still here, right? This is our major swing structure. This is our major swing structure, but this is our strong supply zone, right? This is our strong supply zone, and then it becomes weak demand zone. So we want, ideally our target is to take out this weak demand zone. This is what we need. Okay, this is the weak demand zone. This is what our target after the pullback is ended, right? Let's see whether the market will try to give us a confirmation on the downside to take a short trade, or it will still continue the higher highs and goes having a deeper pullback into the supply zone, and then it will reverse. Okay, so on the internal side you are bullish, because it is forming internal break-off structure, higher highs, higher lows, higher highs, higher lows. But on the major swing structure, you are bearish, right? It is clearly visible. This is our major swing structure on the resistance side, right? And now we are just trying to go slow and steadily towards the supply zone. If this is taken out, let's say if this strong supply zone is taken out, so that means market is closing higher, then this becomes our weak demand, now will become our strong demand, right? Only if this is taken out. Until then, this is not a strong demand zone, this is just a weak demand zone, right? So this is how you analyze. If you want, I can just take another example. Maybe Bank Nifty, I'll take an example. Okay, on the same weekly time frame. Then we will, in the upcoming videos, we will go to lower time frames and see how we can actually analyze the trend from a multi-time frame perspective, and then see if we can find a trade opportunity in lower time frame. Now let's see market from here. If we consider this is a break-off structure on weekly time frame, right? This is the Bank Nifty weekly time frame. So where is our strong demand zone on the weekly? So this is our strong demand zone, weekly strong demand zone. Last candle is our strong demand zone, right? From here the demand zone has come. So this is our weekly support. We have a break-off structure on weekly time frame. Still our demand zone is here. Okay, you can move it higher. Basically this is our new weekly demand zone. Okay, instead of, so there is a pullback happen and then the breakout, right? This is the breakout. Now the strong weekly demand, after this particular swing is taken out, this will move here. So this will be your new weekly demand zone, right? You're expecting weekly demand zone here, right? So now there is an internal change of character happened, right? After this, market, instead of continuing on the internal demand zone towards your the strong demand zone on the weekly time frame, it has actually taken out the swing high, right? This is our swing high. So that means it has actually, the break-off structure happened on the swing structure. So now your weekly strong demand zone, from here it will move here, because this is your current swing structure, right? So now once this breakout happened, what you are expecting? You're expecting market to pull back. So for the pullback to confirm, what do you need? At least an internal change of character like what we have seen here, right? We need an internal change of character. Here we have seen after this breakout what happened, the internal change of character. That means you need a pullback to occur. So we are still waiting for the pullback to come. So once the pullback is started, then on the internal time frame you can take bearish view and then take short positions. But on the swing structure, you should note that market is in bullish trend. So what you are actually expecting is a pullback, right, on the swing structure. But so internally what you are looking at is a bearish trend, right, until market turns bullish side on the internal structure after the change of character. Let's say if we take and if we keep the previous swing low here and then we target the swing high to be taken out here, then your risk reward will be 3.8, right? For example, instead of this, let's say market, the internal change of character happened here and then immediately it changed on the higher side. Let's say you take a trade here and this is your previous swing high, right? This is your swing high. Let's say you are going on the long side, taking a position and keeping a stop loss here and then targeting this. And what is your risk reward? Now it is only 1.5. So you want to go for the higher risk reward, then you should wait for the proper pullback at least to the 50% discount zone. So that is what it is needed. So now our discount zone is here. Okay. Within this major swing structure, 50%, below 50% is our discount zone, above 50% is our premium zone. At least we need a pullback to happen until here so that we'll have a better risk. Hope you understood the concept. We'll continue to discuss further in the upcoming videos on how to switch from higher time frame to lower time frame to map the swing structures correctly. Thank you for tuning in. I hope the content resonated with you. If you still have questions on what we have covered today, please feel free to put those in the comments below. If you want to continue learning, don't forget to like, subscribe and hit the notification bell. We appreciate your time. Thank you for watching.